Welcome to the International Accounting Channel. Remember to subscribe to the channel, like, share your opinion. Together with us to answer multiple choice questions about international accounting. Now, let's get started. On November 31, 2024, HTD's customer announced that he had not paid the debt of $30,000 and committed to pay by commercial paper. The accountant at HTD recorded, A. Debit commercial papers must collect $30,000 per credit account receivable $30,000. B. Debit commercial papers must pay $30,000 per credit account receivable $30,000. C. Debit account receivable $30,000 per credit commercial papers must collect $30,000. D. Debit commercial papers must pay $30,000 per credit account payable $30,000. Debit commercial papers must collect $30,000 per credit account receivable $30,000. On November 31, 2024, MIT calculated the interest on commercial paper receivable from customer X in January as $120. MIT's accountant recorded, A. Debit commercial paper interest payable $120 United States dollars per credit commercial paper interest income $120. B. Debit commercial paper interest income $120 per credit commercial paper interest receivable $120. C. Debit commercial paper interest expense $120 per credit commercial paper interest payable $120. D. Debit commercial paper interest receivable $120 per credit commercial paper interest income $120. E. Debit commercial paper interest receivable $120 per credit commercial paper interest income $120. On February 1, 2025, HTD Company borrowed $30,000 from the bank, committed to repay the debt within 60 days, interest rate 12% per year. The bank discounted immediately at the time of borrowing. How much money did the company receive? A. $29,400. B. $27,000. C. $29,000. D. $27,400. $29,400. Suppose, on January 2, 2025, HTD accountant sets up a petty cash fund, $240. Accountant records, a debit bank deposit account $240 per credit petty cash account $240. B. Debit petty cash account $240 per credit bank deposit account $240. C. Debit petty expenses account $240 per credit bank deposit account $240. D. Debit petty expenses account $240 per credit petty cash account $240. Debit petty cash account $240 per credit bank deposit account $240. On January 31, 2025, MIT calculated the interest on commercial paper receivable from AB customer in January $400 USD. MIT's accountant recorded a debit commercial paper interest payable $400 per credit commercial paper interest income $400. B. Debit commercial paper interest income $400 per credit commercial paper interest receivable $400. C. Debit commercial paper interest expense $400 per credit commercial paper interest payable $400. D. Debit commercial paper interest receivable $400 per credit commercial paper interest income $400. E. Debit commercial paper interest receivable $400 per credit commercial paper interest income $400. On December 31, 2025, MIT determined that the total receivables from customers that were 3 months overdue were $50,000, with a provision rate of 10%. The accountant recorded a debit provision expenses $5,000 per credit accounts receivables $5,000. B. Debit provision expenses $50,000 per credit accounts receivables $50,000. C. Debit provision expenses $5,000 per credit provision for bad debts $5,000. D. Debit provision expenses $50,000 per credit provision for bad debts $50,000. C. Debit provision expenses $5,000 per credit provision for bad debts $5,000. On January 24, 2025, MIT Company supplied an order to a customer with a total value of $2,700. The customer paid immediately. The entry to record MIT's sales revenue collection transaction. A. Debit cash account $2,700 per credit revenue account $2,700. B. Debit revenue account $2,700 per credit cash account $2,700. C. Debit account receivable $2,700 per credit revenue account $2,700. D. Debit revenue account $2,700 per credit account receivable $2,700. Debit cash account $2,700 per credit revenue account $2,700. MIT Company purchases inventory worth $100,000. The amount owed to MIT seller is paid in arrears under payment terms 2/10 and 30. According to the net value method, the accountant records this transaction. A debit merchandise account $100,000 per credit accounts payable $100,000. B. Debit merchandise account $98,000 per credit accounts payable $98,000. C. Debit merchandise account $95,000 per credit accounts payable $95,000. D. Debit merchandise account $102,000 per credit accounts payable $102,000. E. Debit merchandise account $98,000 per credit accounts payable $98,000. On April 1st, ABC Company borrowed $X000 from the bank for 5 years to buy a car. The bank interest rate is 12% per year, in which the bank interest is paid periodically every month is $1,000 and the principal is paid once on the maturity date. Determine X. A. $400, B. $300, C. $200, D. $100. D. $100. On June 1st, Blue Ink borrowed $20,000 from the bank, committed to repay the debt within 60 days, interest rate 15% per year. The bank discounted the loan at the time of borrowing. How much money did the company receive? A. $19,500, B. $17,000, C. $19,000, D. $17,500. A. $19,500. Thank you for watching our channel. See you again in the next video.